I'm Booker Cornea. I'm a Cree Métis. I live in Regina and in Treaty 4. I am the Associate Vice President of Market and Shareholder Engagement with First Nations Bank of Canada. First Nations Bank of Canada is Canada's only Indigenous-owned Schedule I chartered bank. We're owned by 87 Indigenous groups, our nations across Canada, and TD Bank as well.
Thank you very much. Kevin?
Yes, hello. My name is Kevin Van Kampen. I'm the Senior Vice President and Head of Business Banking at Meridian Credit Union. Close to 30-year career banker, spent the first 22 years with the big banks. Moved over to the credit union system 6.5 years ago, and it's been a really great ride. So I'm looking forward to telling you a little bit more about it.
Thank you very much. And finally, Mike?
I'm Mike Cousin. I'm the VP of Commercial Lending Products at RBC. We've got about millions customers, small business, right up to commercial client group. 350 billion authorized, 200 billion outstanding, and about 2,000 relationship managers. And Kevin and I it's Halloween, so Kevin and I dressed up like bankers.
That's right.
Got the ties on.
The team is Halloween, eh? So, and I'm Adil Hassam at BDC, so I'm the head of community banking. You might wonder, what is community banking? Well, it's a new line of business for BDC, and the way it operates is a B2B2C model. So really what we do is we partner with First Nation Bank, Meridian, RBC, and the likes, either through loan guarantees or loan participation or co-lending and securitization. So what we do is we deploy capital to allow financing to entrepreneurs through partners. So that's the new line of business we launched in November last year. So right, for this panel, the way we structured the panel is a bit of a past, present, and future. So for the past is how financial institution has supported entrepreneur through past economic crises. For example, through partnership with Crown Corporation or government agencies to build products and learnings. The second portion of the panel will be on the current geopolitical and economic headwinds, comparing with past crises and how are we attacking this one. And finally, what are some of the trends in business bankings and what can we look forward to? So that's the way we're going to structure the panel. So, as we know, from COVID-19 to trade wars, from inclusive financing to AI, disruption is permanent in the current landscape. So our goal is to unpack these changes and their implications. So my first question is to you, Booker. I'm speaking through my new mandate to a lot of Indigenous financial institutions, and we have a partnership with First Nation Bank of Canada. And when we look at the past 5 years, we see that Indigenous entrepreneur and the economic development arms of council bands and whatnot have experienced very, very low loan losses through previous crises. Can you tell us a little bit more of why is that so?
Ultimately, working with nations, which is almost exclusively what we do at First Nations Bank, is just different. I think we've known a secret for quite a while at First Nations Bank that the industry is just starting to catch on to, and that's nations pay their bills. Next year is going to be 30 years that our bank has existed for, and we've never had a substantial credit loss in that period. I don't think everybody else in this room who's never had a substantial credit loss in their organization's history, put your hand up. I thought so, but that's being the industry's catching on to that. We're seeing much more competition. Why, and COVID was no exception. We never had a credit loss in COVID or a commercial credit loss. Ultimately, I think it comes down to a few different things. Relationship, we know our clients incredibly well. We, have a lot less account managers per client than most organizations do in the commercial space. We were able early on to make sure we were in front of and communicating to all of those clients we were worried might be impacted. So that certainly helped. Culture. When First Nations own a business, whether it's a hotel or something else, it means something different to their community than a typical investor. So just imagine you have a family business and all of your kids, all of your cousins, your aunts and uncles work at it. You're going to want to keep that going if there's a bump in the road a lot more than just an investor that's just looking at a ledger and there's a point where you walk away or don't. If you're walking away in these situations, it's going to make Thanksgiving dinner very awkward because you're going to lay off a whole bunch of the people that are at the table with you. So those things, and diversification. Most nations are quite diversified. Their governments, lending to nations is almost similar to mush lending. It's, they can't go bankrupt. They're not going away. They're going to be around. They were around before we were, and they'll be around much longer after we were. So it's a much longer, period that they're looking at the investment in, and that's helped them certainly ride through some of these more challenging periods.
Thank you for that perspective. Kevin, looking back at the COVID-19 pandemic, what were the most effective ways your institution supported entrepreneurs during those times of volatility and uncertainty? Specifically, did you build any specific product, or did you change terms and conditions? And did you build a playbook out of that?
Yeah, no, thank you, Adil. Yeah, so certainly in the credit union system, I mean, we really pride ourselves on really being close to the communities that we serve. So how do we do that? We really leverage localized knowledge, and our teams in the market have a lot of autonomy. And I compared that to my 22 years at the big banks. They didn't always have a lot of local autonomy because all decisions seems to go through Toronto corporate offices. But in the credit union system, it's not like that. There's just more local autonomy, a little more local knowledge that they leverage to help their decision making. So I think that's really important. I would say as far as new products that came out as a result of COVID, well, we did partner with the Business Development Bank on an accelerator loan program. What this is, it's a working capital loan product designed for small business to improve access to capital for all small businesses, and in particular for equity deserving groups who have often faced systemic barriers with access to capital. So working with BDC, we created a whole new credit box. It was just a pilot at the time, and it was actually using the learnings from what was called the HASCAP program, which stands for the Highly Affected Sectors Capital Access Program. There were a lot of learnings that BDC shared with us to say, how can we take these learnings and apply it in a new credit product? So we launched this pilot 2 years ago, and really actually proud to say the product has now gone national, and I know RBC and TD Bank are also offering the product as well. But it started with Meridian on a pilot, taking a chance with BDC, and so that all came out of COVID.
Thank you very much. And Mike, anything to add on the COVID learnings of what happened with RBC?
Well, I look back at when COVID first hit. Not sure if you guys were all in the office working that day, sort of thing, when they said, okay, you don't come back to the office on Monday. And two things we knew when we left. One, we knew that this would end and we'd all come back and our customers would be able to reopen. Two, we didn't know when. So for the first little bit, we did a lot of data mining. We instituted immediately a client outreach program. We were trying to find out from the clients how this was affecting them and what they needed to survive, which was a bit of a crisis that we had going on. So whether the client needed to switch, their amortizing debt to interest only, whether they needed more operating lines, whether they needed, the curtailment or, the mandatory minimum payments on Visa cards waived for a certain period of time. Absolutely, we did that. So we rolled these programs out. We pushed authorities down to the front line so they could quickly action. And we had that constant feedback loop coming back into national office. And with that, we were in touch with the Crown corporations at the time about what they could do to help partner. Clearly, the bank could do so much on its own, but when it gets to be a certain crisis, we have to partner with the Crown corporations to do things. I said the big learning for us was we launched a couple of programs initially, and if they're too complex and too hard to deliver, amongst us we have 10,000 relationship managers talking to customers, and getting that information out, getting the consistent delivery of that product with that many people, you really need a very simple process. And I think that's why things like HASCAP and SEBA, were the go-to products, the ones that made a difference. It was a way to get that, diversification. We leveraged everyone's sales force to get the money out there, kept the economy as much as we could alive, and then just allowed the companies to come up with their plan to solve the problems.
Thank you very much. And maybe final question to close the first part of the panel on the past is, has the loan losses you projected materialized, or was it less heavy than you thought?
I would say if you asked me that 2 years ago, I would have said there were a lot less than we thought, almost nil. But I think once the government programs ended, there were a whole bunch of companies that were just hanging on that just unfortunately could not survive. So I think we allowed them to elongate their life, but eventually those losses kept up, so they spread them out over a period of time. Not nearly as dramatic as we originally thought, but there were significant losses spread in future years.
How about you, Kevin?
Yeah, I would concur. We had quite a few provisions during that period. I mean, Meridian also has a very large book of hotels lending as well, and that was definitely hard hit. So definitely the regulators were very harsh on how much we wanted to provide for that. And fortunately, we were able to reverse the substantial majority of those reversals. We had very few loan losses. I can't even remember one in the hotel sector, and it bounced back quite strong. So yeah, we were fine.
And I guess, Booker, you said you have no loan losses at First Nation Bank of Canada.
Knock on wood.
So at the end of these 5 years of uncertainty, now we are in a new era of uncertainty. I mean, between February and now, we have every week almost new tariffs that are announced. So volatility and uncertainty is permanent into the daily discussion. So the tariffs have prompted Canadian entrepreneurs to diversify their trade and rethink their business model. The difference between this period of uncertainty and the past is, I guess we don't know how long this will last. I mean, we didn't know that much for COVID, but there was a bit of a spike, and we knew that some medication we're working on. But now it's a bit of a more long-lasting type of uncertainty. So, Mike, you're heavily involved in consultation table with the government, with Crown Corporation and whatnot to develop new products, navigating current tariff challenges. So, how are you looking at this new volatile times? Are you applying different concepts, different products? What are your thoughts on the current state?
I said very much the playbook that we have, which we've used for, sadly, I've got this file folder that's got floods, fires, droughts, earthquakes, you name it, COVID, the great financial crisis, and it always plays out. I mean, first, you have to mine your data. You have to find out which clients are affected, how severely you think that they're going to be affected. And then you have to do that outbound calling, reach out to these clients. These clients, I mean, the banks are nervous. These clients are, I would say, freaking out. I mean, it's their livelihood. Talking to them as much as you can, get the feedback on what they're looking for. What's their plan of attack here for dealing with this particular crisis? You're right. Unlike COVID that we knew would eventually end, just not knowing when, I think that this is a different kind of a crisis where it's open-ended. But again, reaching out to the clients, figuring out how we could support them, partnering with BDC to create some programs that are simple to deliver, very quick to get to market. You saw Minister Jolie's announcement last week about a new program for the softwood lumber industry. I think we'll be replicating something like that for the other highly affected sectors that are out there. But to me, it's always just talking to the customer, understanding what their challenges are, and then understanding what their plans are to deal with that. And then we could help them, whether it's finding new clients, new international markets, extending their amortizations, going interest only for a certain period of time. Whatever it's going to take to get them through this is what we'll try and do.
Thank you. And Kevin, let me ask you a follow-up question, a bit on the fly here. Do you feel that these government programs have been effective and they are the right ones that are being worked on?
I definitely think that partnering with government is really important and actually quite fundamental, particularly when we're in rockier times. At the end of the day, we are deposit-taking institutions, and we have a responsibility to protect our deposit holders. And so partnering with governments allows us to take that a little bit extra risk that maybe we wouldn't have taken on our own. It kind of allows us to stick our necks out a little bit farther to help businesses in whatever situation they're working through. And I think if you talk to any entrepreneur, I mean, their whole livelihood is sticking their neck out. So I think we all have a role to play as lenders to stick our necks out too, and to improve that access to capital. And certainly there's multiple examples where partnering with government has proven very effective.
Thank you. Booker, we've launched this summer a pretty novel loan guarantee program together. Can you tell us a little bit more about the program and the impact you're looking for from that program?
Absolutely. We're undergoing a fundamental change in our economy just with the generational shift. Right now, 76% of SMEs are expected to change, small to medium-sized enterprises are expected to change ownership in the next decade. That represents over $2 trillion of assets that are going to, have new ownership. Right now, there's less than 10% of those organizations have a succession plan. Less than half know who's going to own it. There's not a son, daughter, family member, manager that's expected to take over. So the question becomes, who's going to own all of these businesses where people are aging out of them and just not wanting to carry on? And we feel, surprisingly, that First Nations and Indigenous communities are the ideal stewards of many of those businesses. One of the biggest challenges is capital and access to capital for nations. When you're acquiring a business, you're acquiring more than assets. Just about all the time, there's a large component of goodwill built into business acquisitions, and those goodwill's challenging to finance. Thanks to our partnership with BDC, we have a program that's allowing us to finance business acquisitions, regardless of goodwill amount, up to 100% of the acquisition cost for First Nations and Indigenous communities. And we've seen some tremendous uptake on that. A lot of nations are very, very excited. For a lot of Indigenous AcDev groups and organizations, this program is going to advance their development by a decade or more. So we're very excited to work with BDC to bring this product to market, and it's going to change some lives.
Thank you, Booker. I think it's pretty relevant nowadays where we're looking at the government wanting to invest more in defense, critical mineral mining and whatnot, which Indigenous lands are, have a lot of such. So let's jump into the future, lending in the next decade. So, while a recession is not fully forecasted, uncertainty still won't vanish overnight, as we can imagine. So I would want to ask each of you, what do you think will be the two trends that will impact business banking over the next 5-10 years? And what is your institution doing about, catering to that trend? So why don't we start with you, Kevin?
Okay, yeah. So first of all, I definitely think open banking is going to come, and I think it is going to definitely improve access to capital for small business. So I definitely see an application for open banking for sure and improving access to capital. The other thing I see is I see a lot of vertical integration of banking platforms and working with various fintechs. So integrating with accounting software, bookkeeping software, merchant processing, all types of expense management programs. So I definitely see the universe expanding as far as vertical integration with banking. So, and was there a second part to that question, or was it just the two?
Just the two, okay. But let's double click on the technology impacting business lending. A lot of different lenders, especially in the small space, are relying on character-based lending, which is very hard to automate, if you ask me. So how are you attacking such a thing?
Yeah, so certainly technology is really important. I think at all financial institutions, and I think they touched on it on the last panel as well. I mean, we have to know our customers. So I think we'll see a lot of technology that'll help with our anti-money laundering and our fraud capabilities. There are some technology already in existence today that can help provide, electronic ID verification as an example. So a lot of technology exists already, which we're starting to use. We're starting to embed them, incorporate them into our onboarding systems. So I definitely see growth. So character-based lending will always be there, but it really starts up front with the know your customer due diligence that we do, because if we get that right, the rest should follow.
How about you, Mike? What are the two trends you're seeing?
Well, clearly, better decisions and faster decisions are going to come. It'll commoditize small business lending, the low end of commercial lending. But I think that what we have to do internally at Royal and probably every other FI is figure out how you package that with advice. Because you can give a really quick answer, giving the client what they want, but sometimes you need that advice. Like, when you go to the doctor, they can diagnose you pretty quickly. but are they telling you to eat the right foods, exercise, get out, get in the fresh air? Like there's things that we know that we want to share with clients, and the question is, how do you do that? So I think the big trend is going to be how you mirror advice in with the quick solution that you can get from AI.
I totally agree with that. And at BDC, partnering with some community-based lenders, when there's advice with the loan, it de-risks the loan like significantly, especially in the low complexity, high scale space. So completely agree with you. How about you, Booker?
I think the next 10 years is probably going to be the most transformative period in banking in a century. I don't think anybody in this room really understands what that's going to look like with AI and how that's going to affect our jobs, underwriting, what we each do on a daily basis. I think predictions 2 years ago are, not, some of them are coming true, some of them are not. And I really think there's going to be a lot of, certainly uncertainty with how that works, but also a tremendous amount of opportunity for those who get it right. But certainly risk for those who don't. So, I don't know if that's much of an answer, but it's some exciting times to be in our industry, and remains to be seen.
And maybe let me ask you another question concerning trends. So there is a lot of changes in the procurement policy at the government levels, and some of them touches indigenous banking. So how are you approaching that with the government?
Well, we're here to help, First Nations and Indigenous communities take advantage of the opportunities that are happening right now. 20 years ago, First Nations Bank, what was a typical deal? Indigenous economic development 20 years ago? It meant a gas station, honestly. That's what it meant for most nations. There wasn't a whole lot of, what we're seeing today. There wasn't the big, sexy projects where there was equity in a $1 billion renewable energy farm. There wasn't, the equity ownership in mining and, some of those giant facilities. We just had a nation in BC acquire a port that an entire region is dependent on. The Stewart Bulk Terminal that was purchased by two nations in northern BC. That region of BC does not, there's no economy there without that asset, and it's now Indigenous owned. I think we're just going to continue seeing those opportunities come forward. You cannot, there cannot be a significant resource project, critical minerals, without Indigenous engagement, involvement, equity, and procurement. So it's creating tremendous opportunities, and we're trying to support that with partners like yourself at IL and BDCs.
Thank you very much. Maybe final question to Kevin and Mike. The government has announced a lot of upcoming spending in the defense industry. It's not, at least for BDC, a traditional industry that we have been lending. Have you had to adapt your lending practices, your teams, to get the knowledge around that? Or how are you approaching that? Maybe Mike first.
Yeah, so start with there's the defense industry itself, but then I think that the bigger growth is going to come from dual-use companies, and we've seen this in the past. If any of you have gone down to a marina and you've seen the boats that are wrapped in the plastic, years ago, one of our clients was in that industry, and they got a contract to wrap tanks in a desert, right? So all these companies that are in non-defense industries, but the defense industry is going to procure from them. How do they get the startup money? How do they get the mobilization funds to get the raw materials to build the equipment? So we see a lot of activity going on there. So partnering with the government on how the procurement contract is written, how the company gets some seed funding to go, how they guarantee the payment through the piece through the end. All those are going to evolve over time. But I think it's the dual-use companies that are going to rise to the top in terms of where they need the most financing.
And Kevin, financing the defense industry might have some reputational risk. I mean, if the Canadian population is not necessarily for it, that's still, being looked at. How is Meridian looking at that industry?
Well, I think the one thing about Meridian, we are a credit union, and we are the largest credit union partner of the big banks. So certainly we would be open to partnering with the big banks on a large syndicated transaction in the defense industry. So I see us as a participant. We haven't traditionally led any deals in the market in this particular industry. Most credit unions are actually very large real estate secured lenders. Meridian's probably the most diversified. About 25% of our book is cash flow lending, which I would say in the credit union sector is quite a bit. But we would see ourselves as partnering with the big banks on those initiatives rather than leading them.
Okay, well, that concludes our panel. I really thank you, Mike, Kevin, and Booker for your participation on this panel, and I'm looking to chat with all of you and network with all of you. Thank you very much.
Yeah. Thank you so much. That was great.